Welcome to Explain the Charts, where today, September 15th, 2025, we're diving deep into SPY, the S&P 500 ETF, by analyzing both recent news and the latest chart data available, which extends up to September 12th, 2025 UTC. The market sentiment is currently a complex mix of optimism and caution, heavily influenced by macroeconomic factors and specific corporate news. Recent headlines indicate mixed signals. On one hand, the S&P 500 and Nasdaq have recently hit new record highs, largely spurred by cooling inflation data and remarkable corporate performance. A prime example is Oracle's jaw-dropping 41% surge, driven by ambitious forecasts tied to artificial intelligence cloud demand, which undoubtedly fueled significant bullish momentum in the broader market around early September. However, looking forward, there's a strong undercurrent of caution. Multiple sources are reporting that the S&P 500 could face its biggest drop since April this week, specifically following an expected Federal Reserve rate cut. This highlights a significant concern from institutions like Goldman Sachs, who warn that persistent recession worries and evolving Fed rate expectations could disrupt the ongoing bull rally. Furthermore, specific company news adds to the uncertainty, with NVIDIA shares reportedly falling due to a China antitrust investigation, contrasting with a rise in Tesla shares following an Elon Musk buyback announcement. These conflicting narratives create a volatile environment, making thorough chart analysis even more critical to discern actionable trading insights. Let's now turn our attention to the SPY daily chart to see how these events have been reflected in price action. On the daily chart, covering data from May 2024 to September 12, 2025, we observe a sustained upward trend, with SPY consistently establishing higher highs and higher lows. This strong bullish momentum is evident, particularly with a significant rally pushing prices from the low 500s in early May 2024 to the mid-600s by September 2025. However, this journey hasn't been without notable reversals. If we zoom into the period around April 2025, we can see a sharp, almost parabolic decline. Specifically, between April 3rd and April 4th, SPY plunged from 564.52 to 505.28, a drop of over 10%, which then found strong support around the 490 level on April 7th before staging a dramatic V-shaped recovery. This rapid sell-off was likely triggered by a significant market event, possibly related to inflation concerns or an unexpected economic report, quickly followed by a buying frenzy. The subsequent rebound, highlighted by an impressive 11.18% jump on April 9th, where SPY moved from 496.48 to 548.62, demonstrates robust buyer confidence at lower price levels, quickly absorbing the selling pressure. In recent months, since the April recovery, SPY has resumed its upward trajectory, pushing into new all-time high territory around the 650 to 659 range by early September 2025. The news of Oracle's AI-driven surge, reported about 5 days ago, aligns perfectly with the recent strong daily closes we've seen on September 10th and 11th, pushing SPY from 650.33 to 657.63, reflecting that positive corporate sentiment. This sustained upward channel suggests that despite periodic pullbacks, the underlying bullish trend remains intact on a longer time frame, with strong support forming around the 630 to 635 area, which served as a bounce point in early August. Now, shifting to the 1-hour chart, we gain a more granular view of SPY's recent price action, specifically from late August to September 12, 2025. The market has generally been consolidating, moving within a tighter range, reflecting the mixed signals from the news cycle. We can identify a short-term resistance level consistently appearing around 649 to 650 in late August, with SPY struggling to break convincingly above it during several attempts. Conversely, a clear support level has formed around 640.00 to 642.00, particularly evident during the dips on August 29th and September 2nd. The hourly candles show increased volatility during market open and close, indicated by larger wicks and higher transaction volumes as traders react to immediate news and economic releases. The period around September 10th to 11th shows a push above the earlier 649 to 650 resistance, correlating with the positive news, establishing a new higher range before a slight pullback towards the close of our data. The current hourly outlook suggests a cautious approach as SPY trades slightly off its recent highs, signaling potential indecision among market participants after the initial surge. Delving deeper into the very near term, the 15-minute chart from September 10th to September 12th, 2025, reveals the day-to-day battle between buyers and sellers. For example, on September 10th, SPY was mostly range-bound, oscillating between 651.00 and 652.50 before a late-day surge. A key resistance level on September 11th emerged around 658.33, where multiple candles attempted to break higher but were ultimately pushed back, creating a ceiling for intraday gains. On the flip side, strong intraday support around 657.00 prevented significant declines, particularly noticeable on September 12th after a sharp drop from morning highs. The highest point recorded in this dataset is 659.11, occurring on September 12th in the late afternoon, which then quickly reversed, confirming strong overhead resistance at that level. Conversely, the lowest point was around 650.63 on September 10th. Volumes on the 15-minute chart are highly dynamic. Bursts of high volume often accompany attempts to break significant price levels, indicating strong conviction from either buyers or sellers. This tight trading action at the end of our data suggests consolidation ahead of potentially major market events this week, such as the anticipated Fed rate cut discussions. To recap, SPY has shown robust long-term bullish trends, marked by significant recoveries from sharp pullbacks, indicating underlying strength and buyer confidence. Key long-term support lies around 630.00 to 635.00, while recent record highs suggest resistance at 659.00 to 660.00. In the short term, SPY is consolidating in the 657.00 to 659.00 range, with immediate support at 657.00 and minor resistance at 658.50. Looking ahead, the market is poised for significant movements this week due to the expected Federal Reserve rate cut announcement. Bullish scenario: if the Fed's announcement is perceived as dovish or if cooling inflation data continues to surprise positively, SPY could break above 660.00, potentially targeting 665.00 to 670.00. The likelihood of this is moderate, approximately 40%, reinforced if major tech companies like Oracle continue to show strong AI-driven growth. Traders should look for a sustained break above 659.00 on high volume for a bullish confirmation. Bearish scenario: conversely, if the Fed's stance is more hawkish than anticipated, or if global economic concerns resurface, SPY could experience a significant correction. A break below 655.00 could quickly push prices towards 640.00, with a more severe drop potentially revisiting the 630.00 support. The likelihood of a significant drop this week is also moderate, around 60%, especially given the news of a potential biggest drop since April. Confirmation would be a high-volume breakdown below 657.00, followed by a failure to reclaim this level. Investors should closely monitor the Fed's official statements and subsequent market reactions, paying attention to volume spikes and sustained price movements beyond key levels. Additionally, keeping an eye on reports from top tech stocks and inflation data will be crucial for confirming either a bullish continuation or a bearish reversal. Remember, careful risk management and adapting to new information are paramount in this dynamic market environment.